Market sell-off are slightly off the lows of the session. The reality of President Trump's China tariff policy is already hitting one small business owner. He brought a copy of bike manufacturer Kent International's most recent tax bill from an order of more than 4,300 children's bikes from China. The company's chairman, Arnold Kamler, this is a 100-year-old business, told us what he paid for the bikes versus what he paid in tariffs. Watch.
The value is about $220,000, and 5 years ago we would have paid $20,000 of import duty, but now we're still paying $20,000 of import duty, but almost $100,000 of tariffs. We've raised prices several times, but it's at the point right now. And so all the money we made during the pandemic is all gone, and plus a lot more. Even if you say, look, this is the tariff in 6 months, 9 months, 10 months, this will be the tariff, but we get 2 weeks notice. It's impossible to run a company.
In some cases, the customs paperwork is changing night to day. Now, Apollo Global, speaking of small businesses, saying that the trade uncertainty could lead to small business bankruptcies. What about the big guys? Joining me now is Boston Consulting Group Global Chair Rich Lesser. Rich, what are you hearing from CEOs of publicly traded companies about trying to navigate through this?
It's really tricky for them right now. I think some of it is just the base decline in GDP expectations, higher inflation, lower consumption, the things that we read about all the time in the various forecasts. But there are three factors beyond that that come up in my private discussions all the time. One is navigating uncertainty. The second is workforce. The third are supply shocks. If you think about uncertainty, you can't, it's just very hard to plan right now, particularly on things that require capital. One investor said to us, I can't make an investment if I don't have a 2 to 3 year EBITDA forecast I can count on. And right now, people don't feel like they have a forecast they can rely on. But that goes for manufacturing assets, infrastructure assets as well.
So what do you advise them? Because many of them back during the 2018 tariffs and also the signing of USMCA, when you see what happened there, a lot of them said, okay, fine, I'm moving out of China to Mexico or to Canada. We now have this deal. I can see the landscape way out there. And now we have this drama with Mexico and Canada. So what do you advise them to do now?
So the first thing is navigate the short-term uncertainty. So many of them are putting war rooms, so to speak, in place the way they did back in the early days of COVID. Obviously, this isn't a health crisis. I'm not trying to draw equivalents, but the massive amount of uncertainty, what does it mean for near-term sourcing? What flexibility do you have? How do you think about your near-term pricing per the example that you just shared? Like, how do you navigate that, and how do you... And then the second thing is, what do you do to figure out the medium term? What are the no-regret moves to build more adaptiveness in your supply chain? What other suppliers can you qualify? Should you think about investing capital differently, and how much more certainty do you need before you'd be ready to invest capital, which varies sector by sector. So, and then finally, it's how do you build more intelligence into your system? Because right now, just like in COVID, sometimes the problem isn't your first order supply chain, it's who they're dependent on and who they're dependent on. So often using AI and better tools to be able to look through the supply chain to see where the risks are, to be able to navigate them more effectively, and to be able to get the right balance of focus between all of the short-term pressures that are hitting right now, and then what to do in the medium term to navigate a very different world.
It reminds me of the pandemic period and the companies that were fleet of foot who did quick switches, whether it was changing what they actually manufactured. I mean, we had a shrimper who stopped what he was doing and started manufacturing face masks. He was trying to figure out how to do that. He was able to survive during that time. There were winners and losers back then. Who will win and who will lose this time around?
Look, I think a lot of it will come down to resilience. There's always a trade-off between how much you focus on growth and how much you focus on resilience. Of course, every company needs to do both, but right now this focus on resilience to be able to deal with a really uncertain world, as well as other things like workforce pressures, supply shocks.
Do you recommend layoffs? Do you recommend price hikes?
So I don't think layoffs are where most companies are at. If anything, they're in the short term, particularly if they have pretty robust, bigger companies, they're often thinking about how will they add staff and where will they get good workforce from to add a third shift to a domestic facility or what to do. I do think pricing is going to be a key lever that many feel obliged to pull. And so we will see price flow through the economy, and not just in big goods. Halloween costumes, back to school shoes, things that are coming relatively soon to consumers.
People are starting to think about buying that stuff.
And this is the time that the retailers are often thinking about those purchases from overseas. That will hit relatively quickly.
Rich, nobody should be surprised that President Trump is doing this, because when he was campaigning, he took a swipe at good old US of A company John Deere and said he was specifically thinking about slapping 200% tariffs on John Deere because they manufactured some parts of their heavy equipment in Mexico. How do you even begin to wrap your mind around that? He really wants people to bring all of that back to the United States. Do you tell these CEOs, guys, you better start figuring out how to do that?
Well, I think every CEO better be preparing for a range of scenarios, from deals get reached with many of the countries that are being negotiated with, to it stays the way they were announced on April 2nd or goes back to that after the pause. I think CEOs have to be ready for a range of scenarios. I do think, to your point, though, we surveyed investors a week or so ago, very recently, and what we found were 3/4 of investors did not expect the breadth of the tariffs across as many countries, and 80% didn't expect the magnitude of the tariffs.
I see.
So while it's true that he was crystal clear in the campaign that tariffs were going to go up, I think the breadth and magnitude did surprise people, and now everybody's adapting to it, but that adaptiveness and that uncertainty comes with a cost.
Yeah, like I said, he brought out the elephant gun, but we will be watching all of it. I mean, he has said that businessmen who criticize tariffs are bad at business and also really bad at politics. I mean, I wouldn't exactly say Jamie Dimon and Larry Fink are bad at business, and they have been critical of this, but we will continue to watch businesses adjust and keep us posted. Thank you so much.
It's a pleasure to be with you.